Hey guys, Mike here. So obviously my voice is still jacked up, but hopefully it'll get better over the next couple of days. But today was the Fed meeting and the announcement, and of course it was 75 basis points, and the manipulation in the market that I showed you yesterday played out perfectly today for those who actually end up trying to trade it, and I'll show you that. But then we're also going to go into what really I think took the market off guard, and it surprised me as well, and that's what the Fed actually projects rates to get to, not just by the end of this year, by the end of 2023. And I think that's why you see this massive sell-off right at the end of the day. And if you just look, I showed you this yesterday, and I said in the last three meetings right here, boom. You know, they release what they're going to do. The man opens his mouth. It spikes every single time so far the last three meetings. And so, you know, when we move over to actually what happened today and what do you see? They release it 75 basis points. You get the sell-off. He starts to open his mouth and speak. Big spike. It was like a 2 to 2.25% turnaround on the Qs, which is good. And then, of course, there's the major dump right after he shuts his mouth. And so, you know, that's basically what happened. So it played out perfectly. I was happy with it. And let me know in the comments if you actually, you know, end up playing that or not. And if you get anything out of this, guys, please hit that like, subscribe button. I really appreciate it. And now getting into what I really believe took the market off guard, it was the dot plots from the Fed officials. And as you can see, this is a long view, 2022, 2023 right there, and you see the dots and everything. But if we take a quick zoom in here, you can see right there, they're looking between like 4 to 4.5 at the end of this year, and then anywhere from like 4.5 to 5 by the end of 2023. And I think that shocked me even that they come up with that numbers. They're coming up with those numbers, but that's what they think. And so that leads us into just a couple clips I took out of like the 45-minute press conference where he talked and answered questions. Was, you know, understand, don't fight the Fed. And what they mean by this is he's been hawkish lately, but he's telling you like their job is to try to slow this economy down.
Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, in large part reflecting higher mortgage rates.
And this comes from a guy, Charlie Belalo, that I like to follow on Twitter. And look at what he's talking about here. Think about this. 2 years ago, 30-year mortgage rates were 2.87%, and the median existing home price in the U.S. was $310K. Today, the same mortgage is 6.02%, and the housing prices have gone up to $390K. That results in a $16,000 increase in down payment, assuming 20% down, and 82% increase in monthly payments from $1,029 to $1,872. And understand, that don't include property taxes and homeowners insurance, which has both gone up, especially the property tax side of it, depending on where you live at. And so, yes, absolutely. And then, my thing is, I'm expecting to hear major layoffs from the banks because they usually, most companies don't like to employ people to sit around and do nothing. And, again, who's refinancing in this mess? Why would you do that? I remember, I don't know how you felt about it, but I remember when I got the phone call, exactly where I was at, about somebody wanting to, that I should refi my house. And when they told me the rate, I actually hung up on them because I thought it was a scammer because the rate was so low, and I never thought in my lifetime I would see mortgage rates ever be that low. And then, of course, I started researching. I was like, oh, my God, the refi rate really is that low. And so I called them back and said, oh, boy, this is great. But, who's refining into this mess? Who's out there buying these homes right now? It just doesn't make any sense. I don't know. Maybe I'm wrong, but I'm still kind of waiting to hear the announcements of some major layoffs of these major banks because I can't imagine things are going well for them because, a lot of these banks make a lot of their money off us taking out all kinds of loans, first of all, but especially refinancing and buying homes, and that I don't think is happening very much right now. And again, this is one thing I keep going back to. This is what actually is keeping the market afloat more than anything else. People aren't buying the homes, all right? They're just either sitting in cash or, buying stocks and everything, dollar cost averaging in, but could be wrong on that as well, but that's just my thoughts. Let me know what you think down in the comments. And, then he goes on to talk about something that's really important, which is, GDP, the growth of the company, or growth of the country, excuse me.
Higher interest rates and slower output growth also appear to be weighing on business fixed investment, while weaker economic growth abroad is restraining exports. As shown in our summary of economic projections, since June, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth standing at just 0.2% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate.
And as you can see right here is what they gave us today, and this is the real GDP in June projections, but 2022, 0.2, 2023, 1.2, 2024, 1.7, 2025, 1.8. And the normal growth rate I could find really for the United States on average is like 2. So they expect us to be below that, well below that this year, but well below that for the next couple of years. Okay, so I kind of let you know what they're expecting on the economy. And then,
despite the slowdown in growth, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Job gains have been robust, with employment rising by an average of 378,000 jobs per month over the last 3 months. The labor market continues to be out of balance, with demand for workers substantially exceeding the supply of available workers. The labor force participation rate showed a welcome uptick in August, but has little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing the upward pressure on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.4% at the end of next year, a half percentage point higher than in the June projections. Over the next 3 years, the median unemployment rate runs above the median estimate of its longer-run normal level.
and this is the unemployment rate projections they're giving us right now. So they're expecting 3.8 in 2022, which is not very high from here. I think we're at 3.7 now. So 4.4, and then 4.4, and then 4.3 in 2025. And then just real quick to go over the inflation part, the PCE inflation. They don't expect to get down to 2 till 2025, and then core PC still does not get down to 2 even through 2025. And of course, unemployment is the big one, right? I mean, that affects us the most. And of course, what's happening now? You got, say 100 jobs out there, only 50 people to fill them. So of course, those companies got to be more competitive, try to get those 50 people in there, because there's going to be 50 other jobs left vacant, right? So they have to raise those salaries, benefits, that kind of stuff to attract them. Well, if you can get this number to where all of a sudden there's 100 jobs and 150 people, now you can fill all the jobs, 50 people are left out, well, they can lower the wages, they don't have to be as competitive, right? And so that's what they're trying to get to. That was kind of like normal life, my whole life. And so that's the big one. But you also see, how sticky they see inflation. I mean, not expecting to get down to 2% until 2025, right? So even they see this is a problem, right? Especially core inflation, which is the big one. And so, it's just, that's kind of where we're at with that right now. But, I had somebody come just, they say, and I appreciate all the nice thoughts and stuff about me, trying to get me better. Sorry for you guys who are sick as well. I know it sucks. And, but somebody said, man, you seem negative lately. I say, I don't feel like I'm being negative at all. I'm just following the data and presenting it to you. But I'm pretty sure I've been the same since January by saying what I've been saying for months and months. I'm like, don't follow these, people out there telling you to buy every dip. This is not a bull market. This is a bear market. And, you got to pick and choose your spots. But, cash is king. That's just the way it is. It makes no sense. I've never understood these people that come around and say, oh, cash is trash, because sure, if you're buying food or a car or something, whatever, because those prices keep going up. But the last time I looked, if you're buying, I don't know, let's say you're buying Tesla and it was $900 or $1,000 in January, and let's say it went down to $500 in June or something, right? Well, if you just kept holding cash, you're able to buy more shares, right? Doesn't that make sense? And so, that's where I'm at. Like I said, I'm just being patient. You do you, I'm going to do me. But I just don't believe you think the same way in a bear market as you do in a bull market. I think you got to have a different strategy. And so that's just me. Again, people just want to keep plowing their money into it and DCAing in or whatever, that's great. Do your thing. But I just believe in, you pick your spots here and there, and you just kind of be a little more nimble, I think, in this kind of market. And understand, the Fed's kind of putting the writing on the wall for you at this point in time. And again, who knows where it's going to go? All right, that's why I believe in being in the market. But in a market like this, I'm just way more nimble and have a lot more cash than I do money in the stock market at this point in time. That's just me. Again, I don't tell anybody else what to do, but obviously the market keeps going down. But understand, don't be surprised if you see a rally here, because 8 of the last 10 FOMC meetings, a rally has preceded it. And so do not be surprised at all. It's amazing how it works, but when you get a lot of bearish sentiment, a lot of shorts out there, it tends to go the opposite way, right? And so again, watch out for that as well. But, should we be going to all-time new highs? I'll let you answer that question for yourself, okay? And so anyway, hope you guys have a good one, and I will see you tomorrow.